of the trickier areas relating to GST is adjustment events. There are a few different types of events that require adjustments to be made. When it comes to adjustment events, a taxpayer is required to review whether the GST payable or input tax credit claimed in a previous tax period is still appropriate after a change in circumstances occur. Where an adjustment event occurs, the return for the previous tax period is not amended. That is, it is not a mistake made in a previous submission. Any required adjustments are made to the net amount for the current period. Adjustment events are covered in Section 19-10 of the legislation and includes any event that has the effect of cancelling a supply or acquisition, or changing the consideration amount, or causing the supply or acquisition to stop being a taxable supply or creditable acquisition. On the 28th of September, PTP Limited issues a tax invoice to SSP Limited for $11,000, GST inclusive, on the sale of equipment. The tax invoice provides a 5% discount for payment within 30 days. SSP, who is a monthly accruals taxpayer, attributes a $1,000 input tax credit to the September month. SSP then takes up the $550 discount by paying the invoice on the 15th of October. This changes the consideration amount and therefore SSP has an increasing adjustment of $50 in October. This is a $50 input tax credit decrease, which increases the net amount in October. The tax invoice may contain sufficient information to also be an adjustment note. However, SSP does not require an adjustment note in order to attribute an increasing adjustment to October. Let's consider what would happen if PTP Limited actually realises in October that they have undercharged for the equipment sale and issues a credit note for $11,000, cancelling the original tax invoice, and issues a new tax invoice for $12,100. In this case, SSP, as the purchaser, has a decreasing adjustment of $100 in October. This will be applied as a $100 input tax credit increase and therefore reduce the net amount. The $1,100 input tax credit on the new invoice will be accounted for as per normal in the October statement. In this situation, SSP will be required to hold both the credit note and the new tax invoice to provide sufficient information to be an adjustment note.